Welcome to Mex Moves, our weekly podcast on Mexico business and finance. How are you, Eduardo? I think you're back here in Mexico City for the Easter break.
That is correct, Damien. I'm doing well. I brought my students for a reporting trip to Mexico.
Oh, terrific. Well, I hope you get them to listen to the podcast and give them like an A star if they get to the end of it. So this week we have a terrific interview in the second part of the episode with Manuel Rodríguez Arregui. Manuel is co-founder and managing partner at AINDA, a top infrastructure fund based here in Mexico, also with operations in Colombia. And he's going to talk a little bit about the infrastructure opportunities and challenges in Mexico and how a private equity fund like AINDA can play its part. First, Eduardo and I, as always, will go through the news of the week. Eduardo, what do you have for us?
Well, Damien, as you must have read, the Mexican economy didn't do that well this beginning of the 2026. So I'll look into that a little bit. Do you want me to go ahead and just give it up?
Go for it.
So the economy started with a very slow pace. It contracted 0.9% at the beginning of the year, which is not the best result that people, or it is not even the best result. It wasn't what people were expecting. It was a contraction. And at the same time, prices rose quite heavily over the past few weeks. So we have a double whammy in the sense that you have an economy that is not growing, and at the same time you have prices that are rising, which sometimes could generate a phenomenon called stagflation. It's still too early to call that, but without a doubt, the economy is in not the best of shapes. I think the call by the president and the banking convention to boost credit is a little bit of a sign of desperation that things are not going that well. And if you, on top of that, you add the energy crisis that the war in Iraq is generating by increasing the prices of many fuels, in addition to fertilizers, the panorama or the landscape is looking a little bit grimmer than everybody anticipated probably for the first 3 months of the year. Now we have the central bank in Mexico with the decision coming up pretty soon. And people were expecting it to cut interest rates, which would have been the necessary move to boost production, boost investment. But now people are having second thoughts whether they can do that with the prices going up, with the cost of certain materials because of the energy crisis going up. So it's a difficult time for the Mexican economy, while investment is not also picking up. So we'll have to wait and see whether any further measures are taken by the administration to try to persuade people to invest. It's not happening. It's not going as well as they should have or as they wanted to. So it's not the best of all times.
Yes, I mean, most people, by the time they listen to this, will already know what the central bank has decided to do. We're speaking early on Thursday morning. Central bank meeting is announcement is later for today, but definitely expectations for a cut, which were pretty high until the latest inflation data came out, have eased in the market. We'll see what they do. I mean, inflation was 0.62% just in the first 2 weeks of March, which is obviously a very high number for a half month. Just by comparison, inflation was 0.14% in the first 2 weeks of March 2025. So, and now annual inflation is at 4.63%, well above the central bank, the top end of the central bank's target of 4%. Now, core inflation actually wasn't, too terrible. It was 0.22%. That's core inflation is obviously stripping out the sort of the volatile stuff. But most people pay actual inflation, and that's what's the problem. So fruits and vegetable prices were up 24%. Tomatoes, which every Mexican has with as many times as a day as possible, starting with huevos rancheros in the morning, drove a lot of that. And obviously we also had fuel prices going up a lot as the Iran war kind of hit oil prices, which hit non-regulated fuel prices, and airfares also went up very, very quickly. So all in all, that's a problem, especially as you said, Eduardo, in it's just 1 month, and shouldn't read too much into it. But January Economic activity, as you said, fell by 0.9% month on month. And it was quite a broad decline. So agriculture, or primary activity as it's called, was down almost 4%. Industrial activity was down over 1%. Even services, which is more stable, slipped 0.6%. So, there's a long way to go, but, at the end of the day, the year is made up of 12 months and it's not great to get off to a bad start. So things are a bit challenging. We'll have to see how the rest of the year progresses. I think a lot of people are betting that the World Cup will provide an important stimulus in the middle of the year to economic activity, but definitely the outlook for interest rate cuts, helping growth and helping credit has tamed a bit.
Right.
So shall we move on to Walmart, one of our subjects we talk a lot about, but it is the largest private company in Mexico, so I think it warrants it. They had their investor day this week. They invited international, local investors, analysts to hear their plans for the year and announced, a capex. They're investing 43 billion pesos, over $2.5 billion. That's up 10%. A lot of that is going to remodelation and maintenance, about 40%, about a quarter to new stores and a quarter to supply chain and a bit left over for technology. Now, it came at an interesting moment because the stock hasn't, relative to the rest of the Mexican market, hasn't done especially well. Over the last 12 months, it's up about 3%, where the Mexican market's up about 30% over that time period. And investors have been a little bit concerned that the sales have been soft. The outperformance of the average supermarket has been much lower than in the past, and below guidance. I think they grew last year revenues just under 5%, and people at the beginning of the year had been hoping for 6 to 7. It's partly out of their control. It's partly the consumer in Mexico was soft last year, but not for every company. And also the concern, I think, on costs. Costs were rising faster than sales. So although there was a bit of a gross margin improvement, that was more than offset by higher SG&A as the company kind of expanded into different areas, telephony and health and e-commerce, all of which might make sense, but didn't necessarily satisfy the Wall Street bean counters. Some concerns. I haven't really seen anything similar in my years looking at Mexican companies in the stock market. They pretty much got rid of every top executive, or the person resigned. So Ignacio Caridi, the CEO, resigned, was let go. Guilherme Herrera, the chairman, was also retired. The CFO they just announced as leaving. There's a new COO, new CEO, new CFO, and new head of SAMS, new CTO. So it's been a real shakeup of the Walmart's leadership team, which has often been quite stable. And some people think that that's because of this. I wouldn't say underperformance, but lack of outperformance that people had sort of expected Walmart to do. And so this was also the new CEO, Barrientos, who came from Chile, who was the head of Walmart in Chile, but had previously been here in Mexico as a COO, used the investor day to sort of outline his plans and to arrest this slight investor concerns. I think, generally speaking, having listened to it, it's what they call everyday low price, EDLP, discipline. They're going to really, really kind of focus on that. And they said that the perception of Walmart being a price leader has improved as they really focus on that. The second is raising private label. They've been bit vulnerable to some of the hard discounters, notably Tiendas 3B, which has got more than 50% of its sales in private label. Right now, at Walmex, I think they said that private label was 17% of sales, and they want to grow that to like 25% over the next 5 years. But that's still a lot lower than traditional hard discounters. And clearly, Walmart in the US and everywhere is more traditionally a kind of bundler of branded products at very attractive prices, but they're being forced by market pressure to go more to private label. Third is simplification. They're cutting the number of items, SKUs, in the store. I think there's perception there's too much complexity, too much clutter. It's difficult to manage your inventory if you have too much of it. And they're planning, at least in Bodega Aurrera Express, which is their sort of nearest sort of hard discounter type format, they're going to cut SKUs by 30%, and they already got on with that. And then on e-commerce, they've been left behind quite a lot by Mercado Libre in particular. So back in 2020, Walmex had apparently about 6% market share in e-commerce, and Meli had 18%. Right now, Walmex has 7%, so it's barely budged, whereas Meli's gone from 18 to 30%. So it's really gained share against everyone, but Walmart has failed to kind of grab the opportunity in e-commerce. And there was quite a lot of discussion about using supercenters, which these big, massive stores, which haven't really taken on in Mexico in the same way as they have in the US. I think there's sort of sense that because of lack of purchasing power, not having cars, that Mexicans tend to do smaller shops. So I think supercenters over the last 2-3 years have kind of consistently underperformed Walmex's average same-store sales growth, but use them more as as well as being supercenters, use them as e-commerce hubs, and also to get more geographical coverage in e-commerce and make a bigger push in marketplaces, which is really what drives the vast majority of Mercado Libre's sales. A marketplace, and Walmart's been left far behind in that. But again, it's not kind of natural for Walmart to be a marketplace. They typically sell their own products in their own inventory. So we'll see how that goes. But I think the general message is kind of focus on simplification, everyday low prices, reduce SKUs in certain stores at least, make a bigger push on e-commerce, and make your inventory management a bit more friendly, and Americanize it, because a lot of these new people who came in seem, from their surnames at least, I don't know exactly who they are, but it seems that the COO seems to be American, for example. Sam's Club seems to be non-Mexican. CTO seems to be non-Mexican. So I think making it Walmex adopt best practices of the US is another theme from it. Are you a Walmart shopper in the US? Probably not in San Francisco, right? It's probably not too big there.
Not where I live. I haven't seen one of their stores, Trader Joe's, and the other ones are there, Safeway. But it's very expensive where I am in Berkeley. I wish there was a low-price supermarket near me. But yeah, it seems like it's a reckoning time for Walmart in Mexico after so many years of great success. Not that they're not doing well, but it's times are changing, and you could see it with the removal of so many top executives and the new people that will be in charge, who will try to regain track that Walmart had for many years in this country and still does. But it's facing new ways of people shopping and new people, new types of companies that have come into the market. They need to adapt, and that's what it seems that they're doing. So they're reacting, I guess, to a less profitable venture than that they used to have before all the changes that are taking place in the market.
Good. So should we move on to this story, Pemex and Petrobras partnership, which came out in Bloomberg at the end of last week, and there's been a bunch of stories in the Mexican press. Do you think we're going to see a merger of the Mexican and Brazilian oil companies?
I doubt it, because even Claudia Sheinbaum sounded a bit skeptical when he acknowledged that that they were going to have meetings regarding potential ventures. They might have specific agreements on maybe certain fields where Petrobras could help Pemex with their deep water technology, extract some oil from places that potentially have oil down in the ocean. But I don't know. I mean, it's funny. If we still had the opening of Mexico's oil field or oil industry as we had before, Petrobras would probably be bidding for different oil fields in Mexico and trying to extract oil on its own. That possibility has been denied. And now they have to do it through a joint venture of some sorts with Pemex. I think Petrobras is quite interested. I think Lula is pushing for it. I think Sheinbaum will have to decide whether to do it or not. They're aligned politically, so it might make it easier that way. But we have to wait and see. This administration is very nationalistic in terms of its energy resources, and it's going to be interesting to see how they react to the proposal that the Brazilians might bring to the table.
Yeah, I mean, it's pretty interesting to look at the divergent fortunes of Pemex and Petrobras. I mean, about 15 years ago, Petrobras was producing domestically about 2 million barrels a day, and Pemex was about 2.6. So Pemex, 15 years ago, was significantly larger. Now, if you fast forward to last year, Petrobras was at 2.4, so it grew 20% or so. And if you include gas production, sort of equivalent of barrels per oil, it was at about 3 million. And obviously Pemex declined quite sharply to including liquid hydrocarbons to about, I think, 1.6 million barrels a day. So now Petrobras is almost double the size of Pemex. And that's just on production and profitability. Pemex isn't profitable, so and Petrobras is. Now, Petrobras has it's controlled by the Brazilian government, but it's listed in the stock market with institutional shareholders, pension fund shareholders, and it's run as a profit maximizing company. And it's done very well, with a left-wing president Lula's now been president 3 times. So, and it obviously has managed to kind of withstand any of the sort of turbulences that the changes in government and the changes in the board of Petrobras have brought on it. And meanwhile, as we all know, Pemex has done very poorly. Now, clearly, it's not all about the business model. Geology presumably plays a part, but I would suspect that the model is a big factor there. And I think most people from the outside, the Mexican government would probably agree with that conclusion. Petrobras is really, really good at deep water, based on the sort of expertise it's got in the so-called pre-salt basin. And Pemex has really struggled there. And so I think that's if this happens, then we could see some. I don't think there would be any kind of joint venture at the corporate level, but maybe on the deep sea level. But Lula is facing an election in October, and actually the betting markets have just flipped. I read a story in Bloomberg by our mutual friend JP Spinetto, and the betting markets now have Bolsonaro's son as the slight favorite to win, and Lula's popularity has come down. And these projects can take 5 to 10 years, so it would be quite rash, I think, of Mexico to reach any kind of deal with Petrobras, thinking that that a friendly government is necessarily going to stay in place.
Yeah, Petrobras is a great example of how things could be done differently without losing that national element of your oil that runs deeply into Mexico, much more than I think in Brazil. In Mexican historical terms, Pemex has this aura of representing almost the nation. Now, that happened 9 decades ago almost. And I think Mexico needs to revisit its own approach towards its energy resources. We were on that track. We have now backtracked. So we'll have to wait and see whether this might open up a little bit the avenues for joint ventures in certain fields.
So let's move to our last story, casinos in Mexico. I saw an interesting note in White Paper, sister publication of this podcast. They mentioned that Playtech, a UK gaming company, after restructuring last year, owns about 31% of Caliente Interactive. Caliente Interactive is the largest kind of casino business in Mexico. You basically can't look at a billboard or watch TV or turn on social media without seeing ads for Caliente in one form or another. But what was interesting are the numbers that Playtech booked. They booked $54.5 million as a share of its Caliente income. So that's basically suggesting that Caliente would have made, over $150 million income. And it received, because these income is basically free of capex, it's a very cash generative business, they received $46 million in dividends, and another $40 million fixed cash consideration over the next 4 years related to last year's restructuring. So we should suggest that Caliente was paying dividends of $150 million or so. And then in the conference call with analysts, Playtech went on a bit about Mexico, about how it's such a attractive market. It's central to its LATAM strategy. About over 14% of its revenue comes from just one Mexican customer, which is Caliente. In addition to that, they said growth is potentially very high because because gambling is big in Mexico, it's only half of what it is in Brazil. So that they think there's a lot to catch up on versus other markets. And they also think that people betting the World Cup is going to be very, very big for them. And then there was another story in White Paper and also in Expansión Spain, that Codere, which is another big gambling company with big operations in Mexico, headquartered in Spain. They're looking to sell themselves for a couple of $1 billion. They're mainly owned by hedge funds. And Mexico is about half their revenues. I think Codere made over 200 million euros last year. And Mexico was 107 million of that. So it's and we'll see who buys it, but these are very profitable businesses, quite big businesses and quite relevant to Spanish or UK gaming companies in different ways. There was a report in Indigo, a Mexican online newspaper, Indigo Online, that Mexico has 404 casinos now operating legally. So it's all over the place, and more than 10 per state. And there are also quite a lot of illegal casinos. The report said that the government has uncovered 13 casinos that were not regulated and were involved, according to the government, in money laundering activities. So given there's so much tax, the opportunity to avoid tax and be illegal obviously is very tempting. And Olemani, which is a spin-off from Televisa, they also have a gaming business called Play City, which has 18 casinos in 13 states and a lot of gaming terminals. And when General Atlantic came in and took 49% of the football business, but they didn't invest in the gaming business. There's some sort of speculation what will happen to the gaming business. Will it be consolidated or will it consolidate? But it's a big part of Olemani. It's actually bigger from a cash flow point of view than the football side, which is what gets all the attention. So I thought all that news in casinos. I actually have never been into a Mexico casino. I don't know if you have, Eduardo, so I'm not that familiar with how it works from a personal point of view, but I can see how big the numbers are.
I have been to casinos, yes, in Mexico. I have a friend who owns a casino in Mexico and in other parts of the country. It's a growing and interesting business. I wonder whether it needs to be regulated. Maybe I sound a little bit more conservative there on whether Mexicans are probably spending a lot of their cash into gambling. They're adults; they can do so without any problem. But we'll have to see whether this generates any problems later on. But definitely, the people love betting. I do love betting sometimes. It's fun. It's entertaining. We'll have to see how the industry evolves, if it's consolidated or not. And the numbers you just gave are very impressive in how profitable these companies are.
Yeah, I mean, it is regulated and there is a lot of tax. And the danger of increasing regulation is that you move these casinos into the black
Correct.
market where you have absolutely no tax collection. And then, of course, there's potential for even more potential, let's say, for money laundering and illicit money, because I would imagine, and there's obviously no data on this, that a lot of the cartel-related money at some point or another finds its way in unregulated casinos, maybe even regulated casinos. So it's a sector that you really want to make sure that what's going on to the extent possible. And if you over-regulate it or overtax it, then you run the risk that you drive it underground.
Yeah, no doubt.
Today we're joined by Manuel Rodríguez Arregui. Manuel, how are you today?
Fine, and you? Thank you for
Great.
inviting me.
It's our pleasure. So Manuel is the founder and the CEO of AINDA, one of Mexico and Colombia's leading infrastructure and energy investment funds and platforms. Manuel, who I've actually known since my first day in Mexico more than 3 decades ago, has spent years between the public sector, has been a deputy minister, between the financial sector, and now very much focused on building an energy and infrastructure equity fund to help Mexico and Colombia probably resolve one of the biggest bottlenecks to growth, which is insufficient infrastructure and insufficient energy. Anyway, Manuel, thank you for being here. And maybe we can kick off because some of our listeners won't be that familiar with AINDA. Tell us a little bit about it. Tell us how it's evolved since you founded it. And maybe tell us how it's different today to how you thought it would evolve when you started it.
Well, we started AINDA in 2015, so it's been a while by now. When we raised the first fund, many people thought that we were a little bit crazy because everybody was thinking of the arrival of López Obrador in Mexico, and many people thought that implied that there were no opportunities to invest in infrastructure and energy. The reality is that, as you said in your introduction, there's excess demand for energy and infrastructure in a country like Mexico or Colombia. And that whenever you have excess demand, you have opportunities, and you have to do the cherry picking. Yes, Latin America is complex, but that does not mean that there are no opportunities. You need to put together a team that can identify those opportunities and that can also deliver on the upsides that every single project has. We tend to have the view that infrastructure and energy gets divided into greenfields and brownfields. The reality is that even brownfields can have substantial upsides. To give an example, we invested in toll roads in the state of Chiapas that were brownfields, and we're going to get an internal rate of return of more than 30%. So there are a lot of things that you can do with a brownfield. And you need to be able to add value to your co-investors. If you only compete to provide resources to developers that don't have money, you have an adverse selection. You need to have a value proposition strong enough so that developers or companies that do have the resources still will want you as a partner. And that's what we have been able to put together at AINDA. If you look at all the projects that we did in Fund 1, none of them were projects that where the leading shareholder didn't have sufficient resources to undertake those projects. And we were invited in sole-sourced processes. And you have significant Mexican companies like Ideal or PemBras in which were involved, and in the international sphere of projects, we have companies like Harbor Energy or Pan American Energy, which clearly have sufficient resources. What makes AINDA unique in LATAM other than our value proposition? I would say that our emphasis in ESG. I mean, we were first signatories of PRI in Mexico, first signatories of GRESB in Mexico. And today in PRI, we have a score of 100 out of 100. And in GRESB, we have 30 out of 30. And we have projects that are best in class in the world. Our toll roads in Chiapas have 100 out of 100. The investment that we have in Hochi, which is an upstream exploration and production project of oil and gas, has 100 out of 100. And I think ESG in these days is about not about being green, it's about being responsible and understanding that the responsibility needs to understand the conflicts between social and environmental aspects, and that in order to do that, you need to have a very strong corporate governance.
So as you look at Mexico now, given that you're diversified across toll roads, upstream, sort of E&P, electricity, renewable, and so on, where do you see the best opportunities, or is it very much case by case? Is it impossible to be kind of top down excited?
I think you always need to be optimistic about the opportunities, but you need to be very selective. Our ratio in terms of projects that we look into, where we do analysis and due diligence, to the projects that we invest in is 20-1. So you need to be very selective. And the reality is that you have good and bad projects in every sector and in every subsector. And you need to be able to make a decision not to go even the night before. I mean, that's our job in terms of fiduciary responsibility. I would say there are things that have huge potential that people are not talking about. And let me give you a couple of examples. In the toll road sector, we are not sophisticated, I would say, anywhere around the world in the operation of toll roads. And let me give you an example. In every single sector of the economy in which you have production that you cannot store, you need to have revenue management. You need to have price discrimination. We do it in airlines, we do it in hotels, we do it in telecommunications. We don't do it in toll roads. We tend to think that in toll roads, price discrimination is charging more in peak hour. That's not price discrimination. That's selling the hotel room higher in high season. Price discrimination is selling two adjacent rooms at different price the same night. How do you do it in a toll road? You need to incorporate algorithms that are not being used. Example, we call it the algorithm of the subway in London, sell the monthly pass. Or the algorithm of the McTree in McDonald's, sell a long haul, not as the sum of the parts. That has huge potential in terms of revenue, especially in segments where you have a lot of heterogeneity in the elasticity of demand. In a country like Mexico, short toll roads that you link to adjacent cities, for example, Mexico City and Toluca, or Saltillo and Monterrey, to give examples, huge potential. So there are things that we're working on that are going to provide huge alpha due to the sophistication of business side. In the power sector, people don't understand that it's not about, for example, in renewables, setting up shop where you have wind or sun. As in any business, you first need to look at the demand, and you need to think of projects in nodes that are importers, and in some cases, the congestion in the transmission lines in a node which is an importer is a barrier to entry. So if you invest in that node, you're going to make a much better alpha than you invest in the middle of nowhere where there's a lot of sun.
Manuel, on that sense, you started explaining us about AINDA by saying that people thought that you were crazy investing at a time when the president was about to become, when a politician was about to become president, he had adverse views on private participation in the energy sector. However, like Damien said, and you coincide with his assessment, you feel that the demand is there and the needs are there, both for energy and infrastructure. But hasn't it, this adverse attitude, increase the risks and therefore increase the costs for the people that you're providing the energy services or the infrastructure services?
I think we need to differentiate where I think that the government, both the previous government and the current government, are correct, and where they need to adjust. Okay? Because we tend to think in the private sector that everything that the government does is wrong. The reality is different. The reality is that we live in countries where we've suffered chronic capitalism, and thus there needed to be some changes to the status quo at the time. And there are things that the government has done in which the government was correct. Let me give you an example. In renewables, we invented in Mexico a system to subsidize renewables in 2007, which was, we call them legacy projects right now, which was basically, given that renewables everywhere around the world needed government support in order to be viable in 2007, in Mexico, we decided that instead of using the American model, which were basically tax breaks, or the European model, which were subsidies using government funds, in Mexico, the government decided to basically offer a swap in terms of location and in terms of time of day. So you could actually produce at noon and sell the electricity 8 p.m. or produce in the desert of Sonora and sell it in Mérida, in the south. That made projects viable in 2007. When we did the reform of 2013 and 14, we did grandfather those projects. But the grandfather clause established that the grandfather would apply only to projects that were finished by 2015. And you have people, even last year, 2025, 10 years later, demanding the grandfather clause without having invested, while the technological change implies the cost of generation has been reduced by 83% since 2007. So if you have a government that says, I'm not going to give you the subsidy that a project required in 2007, in 2025, the government is not acting in a wrong way. I mean, the government is doing what the government should do. Now, there may be people that were thinking that Santa Claus was still going to arrive, but the fact that it didn't arrive is not that you have a government that is not respecting rule of law. We need to be much more objective about what's going on. And the reality is that in countries like Mexico or Colombia, whenever you speak to a foreign investor, they see things differently than local investors. In AINDA, we have a say, leave the citizen at the door. You need to do this job in a very objective manner. And the only way to do it is not walking into the office after reading the front page of the local newspaper and feeling depressed about what you just read.
So leave the prejudice at the door, be the investor inside the room.
Yeah.
And
be optimistic and be selective.
In that sense, Manuel, we have a Plan Mexico that's been touted by the administration for more than a year. In that sense, are they doing it right from that perspective you just gave us, or they need to adjust it more? And how do you view the public-private partnerships to really encourage people like you and others to go ahead and invest in energy infrastructure and other projects?
Let's start with the genesis of PPPs. PPPs started all around the world when governments ran out of money and construction companies didn't have work to do. But the construction companies didn't have money either. So we basically designed PPPs around structures of off-balance sheet finance that could be highly leveraged. With the changes in IFRS 16 that went into effect in 2019, those structures are no longer viable because today's accounting principles imply that if you are the sole off-taker of an infrastructure or an energy project, you ought to register as a liability the present value of future payments. But those payments cover the capex and the opex. So the amount that you bring up front as a present value is actually much larger than the value of the asset. So you destroy value with those kind of structures. So to start with, you need to completely rethink what a private-public partnership is all about. Okay? Now, you have the banks and some construction companies who still wish that the changes in accounting principles had never taken place. In my opinion, IFRS was right. Whenever you have finance, it cannot be off balance sheet. And we needed to eradicate the loopholes that existed in accounting principles. Today, let me give you an example of a good PPP, okay? We built the highway from Monterrey to Nuevo Laredo together with PemBras. I mean, that was a huge bottleneck in our infrastructure. I mean, Monterrey is the most important industrial city in Mexico. Nuevo Laredo is the most important crossing into the United States. And you had a toll road that was a mess. We proposed together with PemBras to basically solve that bottleneck and to do it through a PPP. How did we do it? We said, give me the freeway, give me the right-of-way of the freeway, and in that right-of-way, I'm going to have a toll road and a freeway, and I am going to take care of the maintenance of both. So it's a PPP because the government provided an asset. We did all the investment, and not only we did all the investment, we gave substantial money to the federal government upfront, and we also have, as part of the PPP, a sharing of the profits. That's a completely different definition of a PPP to the typical take or pay.
And is the government doing more of those, do you feel? And are they?
Well, I think it needs to come also from the private sector, because the problem that I have with this old conception that we have about government plans, to start with, it assumes that the capacity to think projects and to come up with the idea and to put them together and to do the engineering has to come from the government. That is wrong. And especially it's not only wrong, it is unrealistic. Why? Because we have had a depletion of, let's call it, intellectual capital in government agencies. Partly as a result of the huge reduction in wages in real terms. So I think that the private sector needs to assume a new responsibility. And you have good examples these days of projects that are in the works, fully developed and engineered by the private sector.
So again, you're telling us not to be afraid and to be a risk taker, to go and grab the horn by the bulls and propose, and that might take you somewhere that is beneficial for both entities and the public.
Yes.
That's your experience.
And there are good opportunities. I mean, whenever you have excess demand, there's opportunity. And it's interesting the experience that we've had in Colombia, for example. When we started looking at Colombia, Petro had just arrived into power. And whenever we've traveled to Bogota and Medellin, people say, same thing that happened in Mexico, you're crazy, Petro just arrived. And we said, we've seen this movie. And if you ask me, I'm bullish about Colombia because I would say that the strength of institutions in Colombia is actually better than in Mexico. So they are going to weather this better than we did. My two Colombian partners, Juan Carlos Echeverri, who in the past was Minister of Finance and CEO of Ecopetrol, and Ángela María Orozco, who was Minister of Communications and Transportation, and many years ago was Minister of Commerce, who actually did the free trade agreement with Mexico. When we started talking, they were not optimistic about the opportunities. Now, the reality is different because we signed, for example, a strategic alliance with Grupo Aval, which is the most important financial group in Colombia, because the head of Grupo Aval and the head of Corfi Colombiana said the team that AINDA has put together is nowhere to be found in Latin America, and we want to partner with you guys.
Manuel, switching back to Mexico and two sectors, oil exploration and production and electricity. How are you seeing Pemex's new efforts to bring in private capital to exploration and production? Do you see AINDA continuing to play a role in that, or do you see better opportunities elsewhere?
Let me divide the answer into three cases, which are completely different. In the upstream sector, the reform of 2013-14 still in place. I mean, we have an investment in Hochi, which is a field in which we partner with Pan American Energy and Harbor Energy, that is producing and is a production sharing contract, and we basically are partnering with the federal government, in which they get a share of the revenues. Projects like that are still in place, and you have projects that are coming into production phase that can produce significant number of barrels. So that's one part of the equation. The second part of the equation is that we have a misconception in Mexico that the resources, significant resources, are concentrated in shallow waters. The reality is that geologically you have a continuation from what you see in the US. And in the US, the majority of production is onshore. And Mexico has significant potential resources to produce onshore. Now, that requires shale, just like in the US. I think the government is now convinced that Mexico should produce using shale technologies. We need to align the Department of the Environment in order to understand that shale production is not detrimental to the environment, as long as you do the proper water treatment. Just like in mining, it's very similar to mining. The reality is that the depth at which you have water and the depth at which you have oil and gas is completely different. What you do is you inject water with chemicals at a depth that it doesn't get mixed up with the waterbed. But that water, once it comes out, is contaminated and you need to treat it. Just like in mining. And given that these resources are in the north, we need to also define the source of water for that production. If we solve those two equations, there's huge potential in Mexico. The third type of things, I would say, has to do with mature, what we call mature fields in Mexico, which the definition of mature is completely different to the definition of mature that you see in countries like the United States. If you see, for example, the fields north of Los Angeles managed by California Resources Corporation, you have fields that have been producing for more than 100 years. That's mature. The technology that you can use to optimize mature fields in Mexico has a long way to go. Pemex does not have the technology, and Pemex needs to partner to increase substantially the recovery factor of fields which Pemex thinks that are mature, but in other parts of the world, they are not considered mature. Now, things that need to be resolved. Pemex plays a role with two different hats. One hat is as a partner in the operation. In those cases, it needs to understand when can Pemex be in the driving seat and when it should be the co-pilot, depending on experience and technology. The other hat that Pemex uses is basically as a trader. It buys from private fields and it resells that oil and that gas. As a trader, Pemex cannot continue the practice of not paying in time. And unless you give security that payments are going to come in time, you're going to have a risk factor that is going to seriously diminish the amount of investment that you can have in Mexico.
Last question from me, Manuel, on the electricity generation, but also, I guess, transmission, where there are a lot of infrastructure bottlenecks in Mexico. We've seen big players like Iberdrola exit, some Mexican players replace them to some extent at least. Where do you see electricity investment coming from to meet this excess demand that you spoke about at the beginning of the conversation? And will AINDA play a relevant role in that?
We need to solve the bottlenecks in transmission. The only way realistic to solve those bottlenecks is to increase the participation of the private sector in Fibra E, of CFE. Increasing the participation of the private sector in Fibra E would allow CFE to have resources to invest more funds in transmission, and that is something that needs to be done. With respect to generation, I think we need to be very careful not to make the mistake that we did in the past in terms of using structures that are not in accordance with IFRS 16. Basically, the ideas that some people have of CFE buying 100% of the production of a power plant or a renewable is completely wrong, because that would go into the balance sheet of CFE. Same thing whether you same thing and similar issues with respect to operation. There are things that CFE is good at, and there are things that CFE is not good at, and you need to decide who should sit in the driving seat. In some cases, we make the mistake of thinking that a good project is a project that can get bank financing. The reality is that you can have structures that are good for the banks, but that are not good for the equity investor. Temptations to limit the internal rate of return of the equity investor are wrong. I mean, equity is equity.
I was a little bit shocked when you said that the conditions of the officials in Colombia are better prepared than the ones we have in Mexico, due in part to the downgrade salaries they face in Mexico because of the tap the government has put on not anyone earning more than the president. Is that, I mean, and I see that you're an optimistic, well, let me put it differently, that you're a realistic, that you see things that are working and are not working, and that you need to go ahead and propose rather than sit down and complain. But don't you get frustrated sometimes when you're facing with ideas that you have and that the other end might not capture all the elements that you bring to the plate? How do you deal, and what should Mexico do in that sense? I mean, you're an investor, you have a great presence probably with government authorities. Can you sway them to think differently?
My experience with members of the cabinet of the Sheinbaum administration is very good. I mean, they're willing to have open conversations, and they're willing to change their mind, and they're willing to adopt new practices. I mean, the announcement of eradicating cash from toll roads is a good example of that. We prepared the documents that convinced them, and they are moving ahead. So it's a good experience. Now, it's also important to understand that within the party in power, you have people with different views, and that sometimes there's even conflict within the party in power. Now, my comment with respect to Colombia didn't have to do with salaries, it had to do with institutions. In Colombia, the judiciary and the legislative branches of the government have limited Petro more than what we've seen in the recent history of Mexico. And I think that's good.
Yeah, checks and balances.
Yeah.
Well, Manuel, it's been really fascinating to listen to you. It's great to hear an optimistic, if I may say so, point of view on where Mexico stands in key sectors of its economy, and to see someone doing something about it. So I can not only thank you for sharing your time with Damien and me. Thank you very much.
Thank you.
That's it for this week. Thank you very much for joining Next Moves. Hope you join us next week. All the best.